All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Today was an important FOMC meeting day, which ended up being really a bit of a nothing burger. And Jerome Powell kept rates the same as we were expecting him to. Even with the pressure that President Trump is putting on Jerome Powell, we did not see any rate cuts. And he came out today pretty set in his ways about not cutting rates. And really, the earliest he was talking about was September. He wants to see more data come in on these tariffs and the effect of these tariffs before even thinking about cutting rates. And so I made a video about this a couple weeks ago about the overall bearishness of this, and that also we can't expect the money printer to turn on and come save us anytime soon, because Jerome Powell is dead set on cutting rates all the way to zero before even doing any money printing. And he's not even thinking about cutting rates anytime soon because he wants to see how this impact on tariffs affects the markets. That will take time. That will take a couple months worth of data to come in. So all those people thinking that the money printer is going to turn on sometime in the next month or two or a couple months here, I would just be cautious about that. And of course, when the money printer turns on, it's good for risk on assets. When it stays off, I don't want to say it's bearish for risk on assets, but it doesn't have the bullish catalyst that the money printer turning on does for risk on assets. Crypto is considered risk on asset class. Okay, so as far as technical analysis goes here, we did see yesterday in the video that I made yesterday, we talked about the SFP of the weekend lows. We had that clean, clear SFP of the weekend lows, reclaim the channel, and then we saw a bit of a pullback here. Now, yesterday when I was making the video, we weren't even up to this midline yet, or I think we were just about up to this midline. Just broke it. That's right. I took profit there already. And we were looking for a move up, looking at this structure here as a potential impulse to the upside, where we were expecting the overall impulse to end up around that 98 to 98.3, 98.5 at the top of the channel, where we then maybe could see a bigger pullback from that area. Well, this impulse so far is playing out very, very nicely. And we were looking at this initial push up as a wave one, this initial pullback to the POC and to the VWAP as a wave two, this big explosion that we were seeing during yesterday's video as the wave three. And we were looking for that an impulse to end and see a bit of a cool off around the 1.618. Well, if I throw that 1.618 on the chart, you can see where did we get that kind of stop. Right on the hourly chart, we wicked past it, but we stopped at the 1.618, which is exactly what's to be expected in a 5-wave impulse. That 1.618 is a key target for you to get your cool off for a wave 4 correction. So we hit into that 1.618. I actually took some profit on my long once I saw it. We started rejecting from there. And then I did say we could see a pullback down to the channel midline in our wave 4, and then that initial push up in our last push up in a wave 5 up to this 98.3, 98.5K area, top of the channel. So far, I want to talk about this impulse because so far it is still playing out. Now, our wave 4 with the FOMC uncertainty today, and the market's kind of paused waiting for Jerome Powell to speak. We did get that initial push down, back tested the channel midline yesterday evening, I guess, for my time. And we did get a nice little push up, and you can see on this little retracement up here, let me go ahead, I'm going to delete that 1.618 now. If we do a Fibonacci pull from the highs of yesterday to those lows, we turn on our 886. You can see that we didn't quite hit the 886. We were pretty much right there at the 886. So I guess you could say we came up to that 786 area. We rejected from that 786 area. And then we saw a bit of a pull down today during the volatility of the FOMC meeting. But as far as our 5-wave impulse goes, we have our wave 1, 2, 3. And then in a fourth wave, your fourth wave is generally longer than your second wave. And it's usually a 3-wave corrective structure. So during that FOMC meeting, we did drop, if we do our Fibonacci pull from the lows of wave 3 to the highs of wave 3, and we turn on our wave 4 targets, your wave 4 targets are between the 0.382 and the 0.5. If you hit the golden pocket, then you will invalidate that impulse. So let me go ahead and turn on that 618 there, which is the start of the golden pocket. So you can see that during the FOMC volatility, we did get that last push down, creating that zigzag three-wave corrective move that we like to see, hitting our 0.5, but not hitting our golden pocket. And we are now recovering from that move and pushing up. I will say this, our large point of control at 97,328, at least on Coinbase, is giving us a lot of resistance. We are having trouble breaking above that point of control, which is to be expected. I did say this last week in the videos last week that we were expecting a retracement from that area and that we could form a range around this point of control for quite a while because it is a more macro resistance on the charts. It's the strongest resistance on the charts. So it is not surprising to me that we are having trouble breaking this large point of control here. That's the point of control of our previous all-time high range up in this area, that point of control. So Bitcoin is having some trouble here, but I do expect this impulse to continue to play out. A 1, 2, 3. Now in our fourth wave, you see that three-wave zigzag correction down to the 0.5, and then you want to see that fifth wave explode up. You know, I would like it to come to 98.3 to 98.5, and actually it could even come a bit higher. Let's go ahead and measure that target. So let me clean up this chart just a second here. And if we take our Fibonacci from the lows or from the highs of wave 3 to the potential lows of wave 4, we turn on those expansion targets. You can see that our wave 5 target is between 98,200-ish and 99K pretty much. That is in the area where our channel would be ending. That is in the area of our daily resistance above us. And we also do have this order block in here that I just have marked out because I want to pay attention to that order block. I do think we could get a reaction from this order block, which you can see is right at that 1.236 expansion target to end the fifth wave. So this impulse is still in play, and it is still following the technicals right now. I would like to see it break up soon. We need to see it break up relatively soon here. We just closed the daily candle 6 minutes ago. So now you can see the VWAP just snap to price reset here. And I would like to see us continue up to this 98.2 to 99K really. Once we get up here, we are seeing some warning signs on the chart still. If I go zoom out to the 4-hour chart, you can see that if we do get up and make a new high, we will be putting in another drive of bear div on the chart. We have our initial highs on Wednesday, higher high, higher high, higher high, higher high, higher high, 5 higher highs, and then you can see our bear divs coming in this area. Money flow coming out for the majority. Now it is crossing up into the green again today, but that could easily just roll right back down if we get up to here and see that strong rejection, confirming another drive of bull div on the 4-hour chart. We would have multiple drives of bear div on the 4-hour chart. Also, in terms of market psychology, you would probably have a lot of people longing the breakout of this point of control up into resistance and then seeing that bigger push to the downside. So I am still leaning for one more high to be made. Also, if we look at why am I looking for one more high to be made, not only based off the Elliott impulse that we're seeing, the lower time frame Elliott impulse that we're seeing from the bottom of the channel, but if we do a Fibonacci retracement from the highs on Friday to our lows on Sunday, and we turn on that 886, you can see that we have tapped that 0.886. So in a trending market, if you come up, you see that retrace, you come up and you tap the 886 and reject from it, it makes it far more likely that eventually you do come out and take out the highs where that fib was pulled from. So since we have hit this 886, it increases the chances to come take out this high. That, along with our lower time frame impulse that we're seeing up here, I do think we can make it up to this 98.2 to about 99K area. It's also the top of our channel. We've been talking about this channel for about a week now. When you do see this exhaustion starting to happen in the buying, you start to see this contracting diagonal or whatever you want to call it, parallel channel that's happening where you do see the impulse kind of cooling off a bit. That should be a warning sign as well that maybe if we hit into resistance one more time, maybe grab the liquidity, the highs one more time, we could see that bigger dump to the downside where you finally do break market structure and see that bigger correction down. So I am locally still leaning bullish, leaning for one more high to come in on the charts. It looks like we're trying to pump up right now and attempt that. But overall, once we get up to this area, I'm going to have some major concerns that we could see a bigger drop to the downside. If we go onto the 8-hour chart, let's go on to our 8-hour chart. You can see that if we make another high into that area, we would be putting in a third drive of bear div on the 8-hour chart with money flow topping out and coming out. Higher highs here all through the channel, lower highs through the momentum waves, and our money flow is now coming out and curving to the downside here. Multiple signs, multiple high time frame warning signals flashing on the chart. And if we start to lose this channel, this ascending channel that I've been talking about for a while, if we start to lose this, if we hit into the top of this with another drive of bear div, I will be looking for shorts. Okay, and if we go on to the daily chart also is priming for some bear divs as well. Now, money flow still looks pretty strong on the daily, and money flow will always overpower those bear divs. But if we can come up to this area, 98.2 to 99K, we make another high that would confirm, and then we see this momentum wave we reject from this area, see this momentum wave top out here, it would confirm a drive of bear div on the daily. And hopefully by then our money flow is kind of topping out and rolling to the downside. As far as NAMI goes, you can see NAMI has already confirmed some bear divs coming up into our large range point of control. That key resistance, bear divs on the chart. You can also see NAMI's momentum wave here is lower. And if we can come up just a little bit higher, we'd want to see it happen pretty quickly here. NAMI could also confirm another drive of bear div on the daily. So NAMI would be confirming 1, 2, 3, 4 humps of bear div. That money flow we'd want to be seeing topping out and starting to roll over here. But NAMI and Market Cipher both are giving us these signals. Actually, let's go back to the 8-hour chart here and let's look at NAMI on the 8-hour chart. So on the 8-hour chart on NAMI, you can see that our money flow still does look pretty good. We did have that hidden bull div into the lows, the weakened liquidity grab, which was giving us a bias to see this push up to the top of the channel again. We did say if the channel held, we would get another rise up, potentially up towards the top to take out the highs. Now our 8-hour momentum wave on NAMI is getting pretty overextended here, and the money flow is still overall rising, but I am worried about it starting to reject here and come out if we come up into these highs and reject from these highs. 4-hour chart, NAMI is looking like it has the potential to set up some very local 4-hour bear divs. If we take out the highs up into our resistance, we would be seeing higher highs on the money on the price action, lower highs on those momentum waves. Money flow already looks to be kind of topping out on the 4-hour on NAMI. So we have to just be aware there's many warning signals flashing on the charts for a bigger correction once we take out our highs and actually hit into our resistance above. Just want to warn you guys about that. This is something that I'm going to be watching. If we explode up and see no reaction here, guess what? Leave the long open and keep pumping. You know, next level around 102, 101. We do have some liquidity up around 99.5 as well that we need to be aware of. If we go ahead and turn on our levels here, let's see. Here we go. We have the SFP up here at 99.5. That could be towards the top of the channel. If it takes some time for us to climb up this high, that could be something we're aware of. But really, other than that, yeah, 101.5 to 102.5 is a daily and a monthly, but I would really be looking closer up to that 103 area. If we start to break 99.5, I would look up to 103, where we do have our next big box of resistance. Well, I guess, yeah, 101.5 to 103. We have a daily, a monthly, the value area high of our previous all-time high range, and that 786 is up there as well. Okay, so that is what I'm expecting on Bitcoin locally here. Bitcoin is still looking pretty strong. If we zoom into the hourly chart here, really we're not seeing too much except this POC is really rejecting us. This POC is being a tough resistance to crack. If we do break above it, I expect a quick push up. pretty quick push up into our resistance area above us. Once we get there, we'll have to keep an eye out on the charts, and it could happen within the next few hours. So we have to be really aware of that. I'm going to try to get this video out as soon as possible. Now, another reason I'm expecting this push up, if we do, first of all, let me go on to the 15-minute. Okay, 15-minute looks pretty neutral here. We were seeing some local bear divs on this 15-minute up into this point of control. That is why we saw this little pullback that we're seeing now. You can see bear divs on NAMI, but money flow is still looking overall pretty healthy on NAMI on the 15-minute, which tells me that we could continue up. But the main reason I think we can continue up to our resistance area, if we go onto our CVD and open interest chart here, and we look at this local push down from the end of the FOMC meeting, from our lows today that we made during the FOMC meeting, and we just look at the absorption that's happening on the charts, you can see higher lows on the price action from this general low. You can see lower lows on the CVD chart, and our open interest is steadily increasing here. We are seeing bullish absorption on the charts right now locally, which tells me that we might get that bigger push up. It gives me the bias that we're going to get that bigger push up to take out Friday's highs, to hit up into that 98.3 to 99K area of resistance, the top of the channel. Once we get to the top of the channel, that's a different story. We'll look at that when it happens. If I'm asleep when that happens, that's really going to suck, but you don't catch every trading. Okay, so that is about it on Bitcoin. Actually, that's not quite it. If we look at our liquidations, you can see locally, just covering the last 24-hour heat map here, that the majority of the liquidity is up in that area, right around that 98.3 to about 98.5 would grab all that liquidity. 98.6 here would grab all that liquidity that is acting as a magnet that's above us. So the majority of the liquidity locally is above us. If we go onto our Model 3 heat map, you can also see that the majority, I know that this chart is really small, so I apologize for that, but you can see the majority of the liquidity is resting up above that 98K level. That is going to be our key liquidity that is locally acting as a magnet to bring us up to that area. Now, I want to zoom out a bit though. Once we zoom out a bit, let's zoom out on the last 1 week of price action. You can see the liquidity is above us. Let me go on to the Bybit chart here. But the majority of the liquidity, is locally right above us here. If we zoom out even more, and let me go on to the Model 2 heat map, and let's go to the last 2 weeks of price action. There is, let me get to Bybit. Here we go. There is a bit of liquidity below us still. So after we get into that 98.3K area up to 99K, I am expecting us to come down and take out that liquidity that is below the channel lows. You can see that liquidity, let me go back there real quick, is resting into about 92.5 to like 92K would take out all that liquidity. Now, if we zoom out on our trading view chart, and we just look at this ascending channel that's been building for a little over a week now, 8 days. We're 8 days into this channel now. The lows of the channel, particularly our two semi-equal lows that we front ran yesterday, those lows are around that 92.5, 92.6 area where we could take out these internal lows. The last time we back tested the macro value area low of our previous range, that very, very, very important value area low of our previous all-time high range, flipped it to support. So that liquidity resting down here, because every time we came down to this area, we saw strong reactions. Look at, hit into the area, strong buy reaction. Hit into the area, strong buy reaction. So we have a lot of liquidity resting in particular between these two internal lows of the channel. Now, we also know that anytime you break an ascending channel down or even a descending channel up, you oftentimes will sweep the liquidity of at least the second pivot of the channel, if not the entire liquidity that the channel's created, all the way down at like 91.5. So this is something that we do need to be aware of for Bitcoin. After hitting up into our level of resistance, we could see that bigger drop at least down. And I would say that support level between 91K and 90.5 would be a really good looking support level that we could look for at least a scalp long on. And the thing is though, say we do this, we hit up into this area, break this channel down, come up down to our support level, we might see a bounce, but the bounce might only be to our local golden pocket, pulled from the highs to the lows. We might come up to the golden pocket, which would probably be in confluence with the back test of this channel, and then we could see a much bigger dump to the downside. So this is just speculation right now. We haven't even made it up to the highs. We haven't dumped down to this level, but this is something that I will be watching for over the next couple of weeks to see if Bitcoin does act like this. And it would make sense to me being at a bigger resistance level. We haven't really seen that pullback. Also, as far as market psychology goes, the way the market makers play retail, they are expecting a rejection in this area. We haven't really gotten a very clear rejection, just that weekend drop that happened. And if now that we're pumping again, everyone is longing up near the resistance area, especially if we start to break 97.3 and you see a bunch of longs come in above 97.3 up into 98K resistance, we see that reaction from 98K. We can trap those longs up near the top, and that would give us that fuel to push us down. And I could really see the market makers setting that trap for retail. So this is something that I'm going to be watching for. Okay, that is about it for Bitcoin. Let me just pull this range in. Yeah, still above the value area high. So that's about it for Bitcoin. As long as we're above that value area high, I expect us to continue higher. Okay, Ethereum here. And actually, before we do that, let me remember to do this. Let's go onto our daily chart and let's just check to see no new daily levels here. Let's zoom back into the 2 hour and let's check our naked daily points of controls. Okay, no new naked daily points of controls. We just tapped into that just now, 5-6 minutes ago, and we're bouncing from it. Okay, on to Ethereum. While we're here, while the chart is loading, I'm going to just mark out that naked daily point of control while we have this up. So we do have a new naked daily point of control on Ethereum, about 1827. Let's go ahead and mark that out. Okay. My 7 never works on my keyboard. This is super annoying. Okay, let's throw that in there. And then let's just talk about Ethereum here. So let me go ahead and turn off the resistance boxes. So Ethereum, we did pump up yesterday in the video. I did talk about a couple key levels on Ethereum. We did have that golden pocket in confluence with our value area high. You could see we actually did bust a bit past that. Busted up to the, and actually if we pull this here, yeah, and we look at our 786, you can see that's where we rejected from our local 786 area, grabbing this internal liquidity on this pump, internal liquidity here, seeing the SFP into our 786, and then seeing a bit of a move to the downside today on Ethereum during the FOMC meeting. But look at what Ethereum is doing now. Ethereum, to me, overall, is still looking pretty bullish because we have our range that we've been trading in. I'm just going to extend this range to present day price, price action, present time. And you can see that after rejecting from that 786 and taking internal liquidity of these internal highs, we did see that drop to backtest the point of control of our range in confluence with our pitchfork band. Now, I've been talking about this pitchfork band in the last couple of videos that we've been struggling, kind of just chopping around in this pitchfork band. Well, with that push up that we saw yesterday, we saw a clear break of that pitchfork band. And now we are backtesting not only the pitchfork band, but the point of control and flipping it to support. And now we're continuing this push to the upside so far. We did reject from the value area high as well, so we are still trading within the range, but Ethereum is slowly flipping what used to be resistance in the pitchfork band and the point of control area to support. And if we now, I do expect that Ethereum could work its way up at least to take out our highs that we saw on Thursday. If we do throw that box of resistance back on the chart. Sorry, guys. Let's throw that box of resistance back on the chart. Now, I've left this box of resistance on the chart primarily because that previous range point of control. So that previous range point of control just above us was front run. And I do think that we could come up SFPR highs from Thursday into our previous range point of control, even maybe into our pitchfork midline, and then see that bigger drop to the downside, kind of like what we would see with Bitcoin hitting up into the top of the channel. That is something that I'll be watching for. Now, I don't trade Ethereum near as actively as I trade Bitcoin, but I do want to say that we could see that hit into that channel midline or pitchfork midline, and that might be a really good short to take. Let's go ahead while we're here. Let's turn on our naked daily points of controls. Let's just make sure. Let me go ahead and turn this on. Okay, so it looks like we did not hit this naked daily point of control at 1875 as well. Just barely front ran it on Thursday. So that is still naked. It's not going to show on the charts right now because the PVP indicator doesn't go back that far, but trust me, that's still naked there. And then as far as today goes, you can see that the day just closed 25 minutes ago. So we do have a new naked daily point of control on the charts. It is actually, that's not new. That's from yesterday. Was that from yesterday? No, that's today. We just marked that out. I am confusing myself. Okay, and then yeah, we do have the naked daily point of control from yesterday as well down below. All right, let's turn that off. No new daily levels. Look at that wick on Ethereum for the daily candle. Just that is an FOMC volatility day for you. That Darth Maul candle that you see. Small candle body, wicks on both sides. Crazy volatility happening with FOMC. That's why we love it so much. Anyways, Ethereum is still in the range. Nothing too crazy happening on Ethereum. As long as we can maintain this range, maintain the value area low of this range, I do think that Ethereum is going to continue to push up to at least take out our highs, or maybe even come up to this pitchfork midline. Now, if we start to lose the value area low around 1780, 1779, 1780, then I do think we can see a bigger push down. Let me go ahead and pull our golden pocket real quick and look at this last move up. Golden pocket. Okay, so the golden pocket was where we bounced from earlier today. Good to see that golden pocket holding. That means we could probably expect another push higher to make new highs. But if we start to lose the value area low, we do have that naked daily point of control from yesterday, right around that value area low. But I would say that if we really start to lose the value area low, we're probably going to come down to this box down here, this green box that I talked about yesterday as well, between like 1706 and 1686. That area is going to be a key area of resistance. You can see our anchored VWAP from the lows is coming in there. We have our pitchfork band, or the bottom of our pitchfork, excuse me, nice 4-hour order block in there. So I would say that's the area. If we lose our value area low, we could sweep all the way down there, grab the liquidity of this entire range that's now 8 days long, and then maybe hopefully attempt to make another push up from there. But if we come down here, I do expect that we could see a small bounce to make a lower high overall and then see a bigger break to the downside. Okay, that is it for Ethereum. Let's go on to Solana. Now, Solana, guys, you can see I have a fresh long on the charts. I did take a long on the reclaim of this value area low earlier today. I was actually looking to take a long from the naked daily point of control that we marked out yesterday in confluence with this channel midline. I was just concentrated on Bitcoin, and I did not catch that low there. I got in, so once I missed that, as soon as we started actually reclaiming this value area low, I took a long there. Of course, my stop is below that low, and I'm just looking to bring it up to the top of the channel, this descending channel, which is also near the point of control of our range. You can see this range is our small range of the descending channel. But overall, Solana is still looking pretty bullish to me. Solana worked on, it lost the midline, rejected from the midline. We made new lows from Sunday's lows, took out Sunday's lows, then made that push up yesterday. And now you can see this 3-wave corrective move after yesterday's push to the upside, this big push to the upside yesterday. You can see now we made this very clear 3-wave corrective move to back test our point of control, our naked daily point of control, in confluence with our channel midline, flipping what used to be resistance now into support. So now our channel midline is acting as support. We broke back within our value area, and I do expect Solana to move up to the point of control area, which you can see that point of control of that range is also where we have our local box of resistance. That is going to be a naked daily point of control at 150.68 up to about 151.32, where we have our 786 and our point of control and the top of the descending channel, because it is still possible to get a rejection from here and then continue to chop in this channel for a bit before seeing that bigger explosion to the upside. If this is the wave 4 retrace, we still have not come down to this 0.5. So it is very, very possible that Solana comes up to the top of the channel, rejects the top of the channel, only to come down and grab the liquidity of the range lows and actually hit into our 0.5 and then see the big wave 5 explosion to the upside, maybe even up to $180. But that is what I'm looking at on Solana. It is still just ranging as well, but it is ranging in this nice descending channel that we're seeing here with just one deviation of the channel. And it is being respected. Bounced from the midline earlier today. And yes, I am in that long. I have not taken any profit on that long at all. My stop is below that low. I was comfortable longing this. The risk to reward ratio, it's just a small scalp, but it was almost close to a 3-to-1 risk to reward ratio. And I am in that. Okay, so that is it for Solana. Let's check real quick on the dailies and no new daily levels. And then let's zoom back in and check our naked daily point of control. Okay, so we do have a new naked daily point of control that is very close to that value area low. Let's mark that out. Now, naked daily. Let me go on to the 4-hour. For some reason, the 2-hour, look, if we go back to the 4-hour here now. Okay, I guess I marked that naked daily point of control a little bit wrong. Here we go. So we did not quite hit that naked daily point of control, but we hit the channel midline. I just want to double check this because I know I marked that good. Yeah, so it's so weird. On TradingView, if you change it to the 1-hour, you can see we did bounce from that naked daily point of control. So I'm going to actually delete that naked daily point of control because we did hit that. We did bounce from that, and it was also our channel midline. Now I'm going to mark out our new naked daily point of control that we just formed and confirmed, 30 minutes ago. I'm going to mark that out at 146 pretty much, which is right near our value area low. Okay, so there. Okay, that is Solana for you. So now that we see that we do have a new naked daily point of control right around this value area low, that is going to be a key level to hold as support, knowing that we are back within the volume profile of this range. We bounced from the value area low, we reclaimed the value area low. Now that we have reclaimed the value area low, we can expect that push up to the point of control, which is also other key resistance. If we reject from that, we could come down again to the value area low and continue to chop within the range, squeezing a bit and seeing that breakout. I personally still would like to come down to that 0.5, but we do not have to. So just be aware that this new naked daily point of control at 146, which is in very, very close confluence with our value area low, could hold us again if we come down there as support, and then we might break the channel to the upside after that. Be aware though, at 142.3, I actually am going to mark this as a box because we do have the value area high of the range in confluence with the naked daily point of control up here. And if we take our Fibonacci, we go from the lows, from the highs to the lows, and let's turn on that 886. Yeah, the 886 is right up there as well. So I would say, and we have been rejecting a lot from 886s lately, especially in ranges. So I would say this could be a small area of resistance. I wouldn't put too much on this. Let's just mark this out, 886. But I am going to keep it on the chart because it is technically a multiples of confluence of resistance up there. Just being the value area high of the range is enough to look for some sort of rejection from there. Okay, that is it for Solana. Go ahead and get rid of that. Naked Daily. Okay, there we go. I just want to fix this. No, it's not an 886, it's a 786, and my stupid 7 key doesn't work. This is like a brand new keyboard, less than a month old. Okay, there we go. Let's go on to XRP. Now, I am still in that long from XRP from the weekly. I still have not taken any profit on this XRP long, but this is a bit concerning for me on XRP. And I was really close to taking some profit yesterday once we started breaking above these local highs and then started coming below them. But we were still above the value area low of this micro range. So I did not do that. It is a bit concerning to me the way that XRP is consolidating here, and we're not really seeing that push to the upside. Like the difference on XRP is look at this is a very clear three-wave corrective move, and now 1, 2, 3, 4. Are we going to see a five-wave impulse down after a three-wave corrective move? And that five-wave impulse could take out our lows and actually come down to this bigger 1-to-1 or to the value area low that was front run. So let's just look at XRP here. XRP, we have this small range that is just from last Wednesday, April 25th, week-long range now, and yeah, we're around the value area low of the range. It looks like we're rejecting it right now, coming down a bit. But I do like the bigger 2-week range better. So if we zoom out onto the 2-hour chart and we look at our range that is just this upper range from about the 12th. You can see that, yeah, we're still above the value area low of that range. That value area low was right around that monthly and that weekly. That's why I took that long there. But we did reject from the point of control. Point of control, that range rejected us. And that is a bearish sign. That means next time we could break making new lows, actually hitting our more macro range value area low. Now, this is the most important range on the chart locally. It is all the way from the December highs. The December highs here, you can see that value area low was just barely front run. And I do think that we could see one more push down, and we could even be looking at this. Now, this doesn't work to me so good as an impulse because I do understand 1, 2, 3, 4, 5. But here's the thing. In your impulse, your third wave usually makes it to the 1.618. So at least to the 1-to-1. So that just means you're pushed down in your initial wave 1. Your wave 3 is usually longer than your wave 1. It doesn't have to be the longest, but it cannot be the shortest. So if we look at that Fibonacci fib extinction bull from the highs of 1 to the lows of 1 to the highs of 2, you can see the 1-to-1 target is, or from the A, B, and this is going to be a C, then you want to end that correction between the 1-to-1 and the 1.236. Well, you can see we have some support in that box at around $2, $1.99. We have a naked weekly point of control in there. Let's see, a value area low, naked weekly point of control, and a 786. Now, the value area low is of a different range, but this could continue down. I'm a bit disappointed in XRP. I thought we already back tested that value area low of the bigger range, so let me hide this one. You can see of our big December range, we broke above the value area low, back tested it many times, and pushed up. But we did not even push up to the point of control yet, which is up here. So I'm expecting now that we have reclaimed the value area low, back tested it as support, a push up to the POC. That's just the most logical thing as far as volume volume profile trading goes. You know, the laws of the volume profile, balance in the market. And we have not seen that push up. We did reject from this resistance that I had marked out ahead of time. But I would like to see, and we were creating this nice liquidity curve here on XRP, and that's why I was expecting a bit of a short squeeze to end up occurring to stop out this liquidity trail to continue at least up to our first purple box. We did not get that. XRP is continuing to kind of slow bleed to the downside, and I would like to see XRP hold this general area and continue to make that push up at least to our first purple box, if not to our big purple box up above. We do have the point of control of our week long range. Let me go ahead. I did warn about this yesterday. I kind of showed this yesterday. If we just look at that week long range, you can see the point of control of that last week long range is around our internal liquidity highs. So if we made it up there that and rejected from there, that was an area where I still would be interested in TPing as well. But XRP is still looking overall kind of weak here. Was expecting a bigger push up. If we break our golden pocket from the lows to the highs that we made yesterday, let's turn on that golden pocket. Okay, so we did bounce from it earlier today. But if we break down below, let's turn on our 786 as well. Okay, 786 is near that new naked daily point of control, right around 209.85 to 209.64. That could be a local level of support, but I just do not like the way that XRP is dropping here. And I might close out this trade that I'm in, or I might take some profit here. I know that's not near as much as we were looking for, but a small win is better. To lock in a small win is better than no win at all, or to get stopped out and then, I long the exact lows. So literally 207.8 is my entry. So I'm literally long from the exact lows. So unfortunately, even if I got stopped out, it's pretty much a break even anyways. But I want to take some profit off of this. It was a great catch, and I want to take some profit off this. So if we start to break that 786, I might just close it out, knowing that we would eventually come down, take out these lows, and I would be looking at this value area low around 205, but really I'd be looking at this green box around $2 to like 198, 199, $2 to 199. So that is it for XRP. Just ranging, slow, boring, not much happening. Okay, Chainlink here. Now, Chainlink is seeing a bit of a bigger, nice bullish reaction. We are back within that descending channel. Now, remember, yesterday we were looking for that bounce from 13.1. Let's go to Chainlink and let's turn on our support boxes. We bounced from that golden pocket and we didn't quite hit the daily, which was at the bottom of the green box. But we did bounce from our golden pocket and saw that nice push up back within our descending channel. Now look at this. Once we got back within our descending channel, we were able to back test that descending channel, hold it as support, but we came up and just made another lower high. And then, of course, during the FOMC volatility, we dumped below it, chopped around, but we are back within the channel. And even on the 15-minute, you can see bust back within it, back test it, hold it. Now it is acting as support. We're back within the channel. So I expect we could possibly continue to work our way up to this channel midline near this golden pocket around 14.3 to 14.4. We did reject from the pitchfork band yesterday. I know that there's a lot of levels on the chart, but I did talk about this yesterday. If we go on the hourly chart, you can see we've been chopping around this pitchfork band, these two green lines, this one here and this one here. And when we pushed up yesterday from our support level, we came up to the pitchfork band and rejected from it. To me, that's a bit of a bearish sign because you can see here, that bottom pitchfork band acted as support. We lost it to the downside. Now we came up to it, rejected it as resistance. So does that mean we're going to make another low on Chainlink, maybe actually hitting into that daily level that was just below us? But Chainlink does look better, at least than XRP right now. We are pushing to the upside. XRP is pushing down. I'm not in any trades on Chainlink, and we could look at doing our volume profile pull of just the entire channel. I'm pulling it a little bit further in the channel from the bottom of this impulse now here, and we are below the value area low. So as long as we're below the value area low, we can expect probably to continue this local downtrend down. I guess, yeah, I could see an SFP of yesterday's highs into the value area low as a rejection point. I'm not going to put a box there, but that could be a rejection point, so be aware of that. Let's delete that. Let's delete this. And I forgot to do this on XRP, so I will go back and do this on XRP. But let's mark out our new naked dailies. Okay, no new naked dailies. We just hit into it just now after it closed. And let's just go back to XRP real quick here. All right, XRP's is fresh, but it's pretty much right above us. So I'm not going to mark it out. It closed what 44 minutes ago, and it's literally at 213, like right above us. All right, let's go back to Chainlink. Chainlink is looking a bit more bullish. I do still think we might be able to get that move up to this golden pocket, but we need to be aware of that golden pocket. And let's go check out if we have a new daily level. Nope, no new dailies. Okay, so that's about it for Chainlink, guys. If we do start to, I did talk about this as a bigger concern on Chainlink, this overall higher time frame three-wave corrective move to the upside, and now we're starting to roll over and roll down, rejecting from our pitchfork band up here. So you can see here the pitchfork band was holding as support. Now we lost it to the downside, came to the bottom of the pitchfork. Now we're coming up to the band and it's acting as resistance, just a higher fractal of what's happening very locally. And if we do reject and really start to lose this pitchfork band, like today coming up to it yesterday and rejecting from it is our first sign of weakness, we might break the lows and come down to our next support level, which would be the SFP into the golden pocket. That SFP into the golden pocket is between 12 and 11.9. And we could even come down even a bit further to back test the pitchfork again, which is this support level. We have a naked weekly point of control. We have a fresh weekly level there, a golden pocket, and a value area low. And I would say this is our much stronger support level. Now, the golden pocket I'm talking about on this one is just from our initial push. Golden pocket there. From the lows of A to the highs of A, if this is an ABC, ABC, and now we're going to dump, then that golden pocket's that one there, lower golden pocket. Okay, that is it for Chainlink. Let's go into SUI just real quick. SUI SD. SUI did come up to, well, let's zoom in here. Okay, on yesterday's pump, we were looking at longing the touch of the 382. We did long the touch of the 382. It pushed up to our local 786 area. So if we pull a fib, high to low, you can see that 786 area. We came up to that 786 area. We hit into that 786. Let's see if we touch the 886. I don't, yeah, we didn't. That's right. So 886 not touched, but we are rejecting from the 786. And then, of course, we saw a bit of downside on the FOMC meeting. But if you look at this downside that we saw on the FOMC meeting, it does look pretty three-wave corrective. And we hit into our golden pocket and our naked daily point of control at 324.25. I actually closed out my SUI long from yesterday, but I reopened it here and I showed that in the Discord earlier today. I showed a P&L shot of that. So I am long from this golden pocket touch. Stop is below the low from Tuesday, excuse me, from yesterday. And I'm still, yeah, I'm in this trade still. Have not taken any profit. I'm actually looking to come up to this 355 area where you can see we have a daily, a weekly, a naked daily point of control, and the pitchfork band. POC, excuse me, not pitchfork band, POC. And that POC is of our range of this descending channel, the same kind of descending channel that Solana's in. I think that both Solana and SUI look really bullish right now compared to a lot of the other coins on the market. And that is why I'm concentrating on SUI and putting them in these videos. Now, let me make sure I do not have. Okay, I need to organize my SUI object tree better, but I would say we need to make a box here. This is our main box of resistance above us on the charts. This guy here is a weekly, daily. What else is up there? Oh, SFP. Yeah, we have that internal liquidity grab too. So you can see this internal liquidity, that nice wick that wicked up there. We hit into that point of control and then rejected down to the bottom of the channel. So I do like that internal SFP up there. SFP, daily, weekly, channel top, POC, 355. I do expect SUI to push up to that area. And if we get up to that area with bear divs, I will look to short that because we could continue to chop just like Solana, could continue to chop in this channel for a bit. Now on SUI, we hit into the 382 and we saw that very clean, strong reaction. On Solana retraced a bit deeper, front running that 0.5 earlier. And I do think because we front ran the 0.5 but got so close to it, Solana could come down to the 0.5. SUI, though, on the other hand, if we do take some time, let's just speculate here. If SUI takes some time, ends up coming up to the top of the channel, rejecting from the POC and the weekly at the top of the channel, having some time to work our way down to the bottom of the channel, you can see our naked weekly POC. And if enough time elapses, maybe even the 0.5 would be in kind of close confluence with that area where we could see that general bounce from the bottom of the channel and the naked weekly POC and then see that big break to the upside. But that's what I'm looking at on SUI in the trade here, looking to take profit. I'll probably take 75% profit here and leave a little bit to run because we are still expecting a bigger wave 5 on SUI. So if we zoom out onto the 4-hour chart, we are still expecting that bigger wave 5. If you look at this impulse, a 1 in a contracting diagonal, 2, 3 hitting into the 1.618, 4, 5. And the 5 target is around 424. So that is it for SUI, and this is why I'm looking for long so much on SUI, because this looks far more impulsive than corrective, and our impulse is not completed. Once we get and finish that impulse, I will be looking for a bigger retrace, possibly down to this monthly area, where then we could look for another long to create another giant impulse to the upside. So that is it for today, guys. If you got anything out of this video, please like the video. Please subscribe to the channel. I do have sponsors and partners of the channel. Links are in the description. I have BYDFI Exchange and MEXC. On BYDFI, you get 15% cash back on your initial deposit. You can also get up to $80, $100 in futures trading bonuses depending on how much volume you trade. On MEXC, you get 10% cash back on whatever you deposit, and you can get up to $20,000 in future trading bonuses depending on how much volume you trade. So both those links are in the description. I also have a link for NAMI, this new indicator down here. It's been very, very helpful for me, very useful for me. This new NAMI indicator, right now for a limited time, I do have a 50% off discount code in the description as well, Divine50. So if you want to try this out, there is the link in the description with a 50% off discount code. I mean, that's a very good discount. If you don't, that's cool too. You know, just it's there if you want it. And many of you have been asking me about Discords, about what Discord I post in every single day. That Discord is Jason Casper's Discord. I will put that link back in the description as well, so you guys can go ahead and sign up for Jason's Discord if you want to. Just being fully transparent here, that is an affiliate link. So if you do sign up using my affiliate link, I do get a small kickback from Jason. But I do think it's one of the best trading communities there is. And it's very helpful. I think it's way worth it. And also, it's a way to support the channel and to support me. So if you guys do get anything out of this video and you want to sign up, it would be great if you did use that link. Okay, guys, thank you for everything. I will see you tomorrow.